Hello to everybody, FutureTrend channel is glad to welcome all of our readers. Today is 6th of June 2018 and we start our analysis of major currencies. As you can see, this week is rather empty of major economic events like publications of important economic data or central bank meetings. And that's why probably the market decided to concentrate on major economic events scheduled for next week in the form of the Fed's meeting, where we should understand that the hike from the Fed is looking like a done deal at the moment, and the market is probably fully priced this kind of hike at the moment. But at the same time, we should understand that for next week is also scheduled the European Central Bank meeting. The Bloomberg news from yesterday that the members of the Monetary Policy Committee of the European Central Bank still mulling to exit from its ultra expensive monetary policy over the course of this autumn. Of course, this kind of news had a kind of positive effect on the euro currency. And of course, as regarding now, as regarding current situation, when Italian and Spanish crisis are more or less behind us, the markets try to concentrate on other factors, like for example economic situation. The last portion of economic data that came from the European Union in the form of consumer price index was quite encouraging for those who are looking for the fast interest rate hike from the ECB at the early part of 2019. So from that point of view, the euro dollar should look more or less supported right now, and we suggest that both from technical or fundamental point of view, it's a kind of buying on a dip in case of another move closer to the level of 1.1510, the lows of previous trading week. Let's see the situation from technical point of view. Break above 11750, where is the first resistance level for the euro dollar right now, should accelerate the uptrend, the corrective rebound of the euro dollar, and in that case we could see slightly higher levels, probably testing 11830 or 118. From a longer term point of view, the level of psychological important barrier of 120 should remain a kind of faster, reliable, important resistance for the euro dollar right now. And while below of this level, below of moving average 200 daily line that's located around 120.11, the pair should be looking more or less bearish. As regarding the situation from a bullish point of view, we still suggest that we are now in the period of consolidation. Probably this kind of consolidation should mean that we could trade in a range, let's say, between 118 115 right now till the ECB meeting of next week. As regarding the other currency pairs, the dollar yen is at 1.0998 at the moment. We still keep our short trade recommendation with very close stop loss about 110.05. The sterling is, as we suggest, is also looking quite not quite better, but anyway better than before, taking into account that for the last couple of days economic indicators coming from the UK were rather good. I mean, PMI from construction sector, from industrial sector and from servicing sector. Both of them, all of them were better than expected, and that means that taking into account that PMI usually are kind of leading indicators, that means that probably next series of economic data coming from the UK could be better than before, and that means that in the foreseeable future the cable could receive additional support and probably will extend its corrective rebound we are witnessing at the moment. As regarding the dollar Swiss, here lies a faster support level around current lows at 0.9825. We still keep our short trade recommendation initiated at 1.0045 and still expect that in the nearest future the pair could retest its moving average 200 daily line located at 0.9707. And we'd like to conclude our today's analysis analyzing the dollar Canada. Yesterday's rebound to about 130.60 gave us an opportunity to sell the pair at 130.40. Now we decided to tighten our stop loss to above 130.10. And we still look the pair could retest its major downside barrier around 127.50, but again a lot will depend on decision of Trump regarding trading conditions, regarding trading relations with Canada and Mexico. If he really will proceed further with its step to initiate separate talks with Canada regarding future trading relations and exit from NAFTA negotiations, of course, that will mean that dollar Canada could receive additional speculative impetus to the upside, and of course, as you could see on the example of yesterday, how volatile the dollar Canada could be in such circumstances. And that's why you should use a kind of very close stop loss to prevent you from bigger losses and to save your real kind of profits. Thank you very much for all of your attention regarding our channel. We see you later. See you tomorrow with another analysis conducting from the part of FutureTrend channel. Bye bye for now.